Hey, hi. Today we do February-March 2016, question number 4. First, we read the question. State how maintaining a provision for doubtful debt accounts is an application of the accounting principle of prudence. Okay, prudence, actually mainly we focus on two. One is not overstate profit and not overstate asset. These are the two things we focus for prudence, accounting principle of prudence. Okay, now we write the answer. The answer is a provision for doubtful debt stops current assets from being overstated and profit from being overstated. So mainly here got 2 points. One is stop the asset being overstated and also stop the profit for being overstated. Okay, now we continue. We get 2 marks for this. We continue. Nesbit Limited has an accounting year ends on 31st December. So this company, they will close their account every year 31st December. It was decided to create a provision for doubtful debt on 31st December 2014 at a rate of 5%. So every year the PDD will be 5% and to maintain it at the rate in the future. So every year we will times with the 5% to calculate provision for doubtful debt. And the question continue. Its trade receivable were as follows. For 2014 they gave you 38,000. 2015 is 45,000. And then they give you the additional information. The trade receivable on 31st December 2015 included a balance of 1,000 owed by the customer who was not expected to pay. This was to be written off. Okay, the word written off here, the word written off here is actually the debt has become irrecoverable debts. Okay, whenever you see written off, it's actually irrecoverable debts. Okay, we see the required prepare a provision for doubtful debt for each of the 2 years ended 2014 and 2015. Balance the account at the end of each year and bring down the balance. Okay, can I prepare the provision for doubtful debt? No, I cannot prepare because I don't know how much is my provision for doubtful debt. So we need to calculate the provision for doubtful debt. But before that, whenever you write off the 1,000, write off the 1,000 from the 2015, we will minus the 1,000 from the 2015's trade receivable because it's already become irrecoverable. So the formula to calculate provision for doubtful debt, the formula to calculate provision for doubtful debt is take your trade receivable times with the percentage given. Trade receivable times with the percentage given, you will get provision for doubtful debt. Okay, I'll calculate for 2014. For 2014, my trade receivable is 38,000. So I take 38,000 times with 5%, I will get 1,900. 1,900. And how about the 2015? For 2015, my trade receivable will be, this one will be 38,000. Okay, my trade receivable for 2015 is 44,000. 44,000. Why 44,000? 45,000 minus with the 1,000, which is the irrecoverable debt. Okay, so the balance trade receivable for now is 44,000. 44,000 times with 5%, I'll get 2,200. I'll get 2,200. Okay, now 2014 is the first year, 2015 is the second year. So I will write in my provision for doubtful debt. Remember this, provision for doubtful debt is your asset. Asset minus account. It's asset minus account. So whenever it's asset minus account, the balance will be in a credit side. Okay, it's a credit balance. Okay, now I start. So whenever there's a first year of provision for doubtful debt, 1,900, I record in the credit side. So this is my credit side. I write the date first, 2014. On December 31st, we write here 1,900. 1,900. And then the detail here will be income statement. Income statement. Okay, that's it for this year. Now we balance up this account. How to balance up? Just right here, double line 1,900, and go here, double line 1,900, then go up here 1,900 on the last day of the year, which is 2014, December 31st, right here, balance CD. This balance CD will become the following years, which is 2015, January 1's balance BD, 1,900. After that, the following year, second year. Okay, I see my calculation just now. My first year was 1,900. After that, my second year, 2015, is 2,200. Here, I need to calculate this provision for doubtful debt. Okay, this is my last year. This is my this year. Okay, for the first year, it's become for the first year, it's 1,900, and then the second year, it's become 2,200. Now I want to know my provision for doubtful debt increase or decrease for the year 2015. Last year 1,900, this year 2,200. It's increased by 300. So only the increased amount we record in the provision for doubtful debt account. Okay, because the first year was before the 2014 was 0, so 0 become 1,900, so it's increased 1,900. That's why I write 1,900. And then the following year, from 1,900, it's become 2,200. So how much is increased? 300. It's increased by 300. So only we record the increased amount in our provision for doubtful debt. So I go to my provision for doubtful debt. Increase. Increase means if we record in the credit side, because asset minus increase means it will be in the credit side. So I go credit side, I write here 300. Then the date will be December 31st. Then the detail here, same as last year, income statement. Now we balance up this account. I total up this, I will get 2,200. Here, so I get 2,200. You take the 2,200, you write here 2,200. On 2015, on the last day is December 31st, it will be my balance CD. Can I stop here? No, you are not allowed to stop at balance CD because the balance BD will give you another 1 mark. So to get the marks, you must write 2016, January 1, your balance BD. How much is my balance BD? 2,200. Okay, always remember for provision for doubtful debt, whenever it's create for the first time, create or the new or increase, we will record in the credit side. Whenever your provision for doubtful debt decrease, we record in the debit side. Remember this, provision for doubtful debt when increase or is whenever it's created or new or increase, we record in the credit side. Whenever it's decrease, the income statement will go debit side. Remember this. Okay, then we continue for the next question. Next one, they asked me to prepare extract of income statement. Extract income statement for the year ended 2015. Showing the entry of irrecoverable and doubtful debt. So irrecoverable debt, always irrecoverable debt is your expenses. Irrecoverable debt is your expenses always. But doubtful debt, it's your income or expenses. Doubtful debt, sometime it will be your income and sometime it will be your expenses. So it depends on the situation. So now I want to know when the doubtful debt will become income. Whenever the doubtful debt decrease, when your provision for doubtful debt decrease, it will be recorded as income. Whenever your provision for doubtful debt increase, then we record as a expenses. And now we are doing accounts for 2015. So can you go up check for 2015? For 2000, I check in the calculation. For 2015, your provision for doubtful debt increase or provision for doubtful debt decrease? Your provision for doubtful debt increase by 300. So we're going to write the 300 in our account. So before that, income statement, we have the four category, four section in an income statement. One is sales, cost of sales, other income, other expenses. So irrecoverable debt is your expenses, and your doubtful debt for this question is an increase, so it's also expenses. So expenses will fall under which section? Is either sales or cost of sales, other income or other expenses will be under other expenses. So I go here, I write other expenses, but actually you can write only expenses also can, but I normally we write other expenses. So the first other expenses that I want to write here is increase in provision for doubtful debts. Okay, how much increase in provision for doubtful debt for 2015? Just now I see it was 300. After that, do you have an irrecoverable debt for 2015? Can I check here? Yes, during the 2015, 1,000 was written off. 1,000 was written off. Written off means it's irrecoverable debt. So I will write here irrecoverable debts. How much? 1,000. So normally for the income statement, no need to total up because it's just an extract. So we no need to total up. If you want total up also, you'll get the same marks. No worries about the totaling up. Okay, next one. I want to continue. Question D. Question D is prepare the extract. Again, extract. Extract means a part of statement of financial position on 31st December, recording trade receivable. Trade receivable. So statement of financial position, we have NCA, CA, C, NCL, and CL. Okay, so trade receivable will fall under which section? Under current asset. So here I'll write here current assets. Trade receivable is my current asset. So I write under current asset. And then under the current asset, I write trade receivable. To double check, they asked me to do for 2015. So can you go check how much is your trade receivable for 2015? For 2015, your trade receivable is 44,000 because 1,000 is irrecoverable. So 45,000 minus 1,000, it will be 44,000. So I go here, I write my trade receivable is 44,000. My trade receivable 44,000. And don't forget, in a current asset, under the trade receivable, we will have less provision for doubtful debts. Okay, how much is your provision for doubtful debt for the end of the 31st December 2015? So I go to the provision account, I check my balance CD. Always remember, anything that we write in the statement of financial position, we'll take the balance CD of the accounts, balance CD from the ledger. So my balance CD in the 2015 is 2,200. 2,200. So that's my provision for doubtful debt for the year 2015. So I go here, under the 44,000 trade receivable, I write 2,200 which is my provision for doubtful debt for the year. Then 44,000 minus, you need to minus, minus 2,200. I'll get the net trade receivable, which is 41,800. You write like this. Okay, then next question is, name another provision which Nesbit Limited maintain and which allocate the cost of the non-current asset over its useful life. So the cost of the non-current asset over the useful life, they are talking about depreciation. And then the question asking, what are the another provision that we know? Another provision that we know is provision for depreciation. Provision for depreciation. That's answer for this. Okay, that's it for today. We are done with today's question. This is combination of provision for doubtful debt and how to record provision for doubtful debt in an income statement, and how to record provision for doubtful debt in a statement of financial position, and little bit of provision for depreciation. Okay, thank you. Tomorrow we'll do another one question.